Ladies and gentlemen, welcome to the study. Going to be talking about the most important thing about investing into growth stocks and using Snapchat as an example. And before we proceed any further, I would like to state that the information in this video is not a recommendation to buy or sell any securities and is for educational purposes only. So when we talk about growth, we are looking for companies that will grow at a higher specific rate when compared to the overall growth of the market. And this is the key message I want to point out in this video with growth stocks and using Snapchat as a pretty solid example. You want to make sure that the company's growing at a higher specific rate. Better yet, when you look at their competitors in the same business sector, you want to make sure these growth stocks are expected to grow sales and earnings at a faster rate when compared to the market average. That's just the plain definition of a growth stock. And what happens is when they do execute, they rapidly appreciate the stock price. And as you can see here, I'm going through the slides that Snapchat has put together from their recent earnings, and look at here the previous quarters of their daily active users. This is one of the metrics that they use, and you can see that they are growing in North America, Europe, and most importantly, the rest of the world. There is scalability here. There is a global presence, something that Facebook established very well in the space, and TikTok is now doing as well, and even Pinterest and others. And usually, when you look at these growth stocks, they do not offer dividends. What they do is they reinvest their earnings to help further accelerate growth. Therefore, the investor will be seeking capital gains on their investment by selling the shares at a higher stock price. Remember, buy low, sell high, right? That is one of the main components, very important to consider when investing into growth stock names. Growth stocks can tend to have big moves to the upside, and that means growth stocks can have big moves to the downside too. What comes up must come down, right? And when it comes down, you might actually be able to capture a pretty good buying opportunity with these kind of names. What's a good example? We can actually see this seen with Cathie Wood's investments from ARK, where we have seen numerous innovative growth companies included in her portfolio reach incredible highs at such a fast and high growth rate. Remember, high growth rate is the key word here that we're looking for with growth stock investing, and we can see that growth slowdown in such names in her ARK. You can even go to her website right here, and you can see year-to-date return not doing the best from the previous years, and they've gone through some changes. I don't know if this is the most up-to-date, but just giving you an idea of how growth stock investing looks like. And when we look at this decade of innovation slide, again, they are growing. Look at this. They launched, they went public. They started introducing all these features. You get the idea here. They are putting out features. They are making sales. They are growing their audience. And when you look at the chart of Snapchat, these are weekly candles. So you have a 3-year time frame here. And you can see that Snapchat has been through ups and downs. In the pandemic lows at $6. This thing was a single-digit stock. A lot of stocks got hit during March 2020 when we had the pandemic selling going off. And you can see that over this time, it has just been in this range. And not too many people like the name. A lot of people laughed about this name. It didn't really have much respect until we started seeing this rise happen and a big earnings pop here, and people started allocating their funds into this institutions. You started seeing the CNBC guys talk about it, which was a bit of a surprise to me. I mean, they cover Facebook all the time, but Yeah, the CNBC guys were all over it. Everybody was all over it. We had a positive earnings report, and the main idea here again is the growth rate. And one of the ways to see a growth company execute is if you pull up any tool. There's so many different ways to see this data. If you go to just look at the earnings straight ahead, you have the dates here, you have the earnings. Whenever you see the EPS, the earnings per share estimate, this is what Wall Street is expecting, and you see the reported number here, and they are able to beat the estimate pretty consistent, especially with these big EPS surprises. You are going to have a big move in the market. And so we can do a little bit of an exercise right here. So we saw that big move on the chart, right? Which one sticks out here when we look at these recent earnings? I kind of gave you the answer already, just showing where my mouse pointer is. You could see this July 22nd, 2021. If we go back to the chart, we had a 600% EPS surprise here. This was a big blowout. Everybody was swarming the stock. And here you go. You go to July. Boom. Look at that. Big burst right there. Just incredible. Kind of emulated this previous burst back in October. It was actually a little bit of a wider move there, which then took the stock to a high of $83, which is just incredible. But we then had a slowdown in their earnings and troubles with iOS App Store, Apple privacy issues, all that stuff, and the stock got pummeled down. And this is what happens with growth stocks. When you have a company that can execute successfully and keep on growing at a faster rate than their competitors, there's going to be buyers. People are going to love going to these names, even when you have these big dive downs. And that is exactly what we're seeing after this painful selling that has been taking off in this name. And we then have this phenomenal earnings report, and now so much buying taking place here, where we're getting a big candle and more buyers are stepping in. And that is the key here. When you look at the user growth, the daily active users, right, that we were talking about earlier, we go back here, daily active users. This is a great slide here too. On their earnings slides, great summary here. But what really stuck out to me was that their daily active users were up about 20% from a year ago. They've improved their monetization, which has helped drive their revenues up to $1.3 billion. That's a 42% year over year. If these guys keep on putting their foot on the pedal, things are going to look very bright here for a young Snapchat company here that is trying to grow their market share and grow globally and scale really nice with all their different features on their apps. And on top of that, the company actually gave a better than expected guidance. This is exactly what investors want. And this was a huge surprise given that most investors were thinking, hey, this company blew it last quarter, they guided down, and they're going to guide down again. That was the anticipation, but they did not guide down. They actually did very well, and they gave better than expected guidance. You had the big EPS beat of 0.22 cents a share and $1.3 billion in revenue versus the estimates of 10 cents to 1.2 billion in sales. And the bottom line here is that there was a lot of fear with Facebook reporting earlier in the week of the big bets that they made on the Meta platform kind of backfiring. And this is where it gets really tricky here when we're talking about these different companies and valuations. And there's many ways to go around doing this. And it's going to be kind of long to explain all that. I would have to put another video together. And I will say one note for those who are familiar with price to earnings ratio. the PE ratio. These are often high when looking at growth stocks, which could actually be cheap despite the expensive stock price, especially if the company is growing at a faster rate than its competitors. So the key message I'm trying to point out here with this video is remember what I said. And with growth investing is that you are going to want a company that is growing sales and earnings at a faster rate than their competitors. When we look at Facebook and Meta platforms, what they're doing now compared to before, they have experienced this growth wave, right? They are betting big on the metaverse, and this is going to take time to set up, whereas the advertising platform they had established before experienced an incredible growth rate to the market, and the stock performed well. We saw that. Now, with this pivot to Meta and the metaverse, they have to establish themselves first and see where the cash and investments in this field takes them to. This is the time for Snapchat to prove themselves and continue to rally up with their growth rate, as we have seen through this enormous earnings report and presentation they have put together in their slides. So, guys, just to recap, without making this such a very long video, let's go over the most important points here with growth investing using Snapchat as an example. Growth stocks, again, are companies expected to grow at a faster rate, growing their sales and earnings, right? They are growing at a rapid, fast rate compared to their marketers, the market average. I'm getting a little excited here, right? And you guys are going to have wild fluctuations in the pricing of growth stocks. This is normal. This is where you have to make sure to do your homework before you drop a penny investing into a company name. You better make sure you are familiar with their product, their services, who are their competitors, and are they growing at a faster rate to their competitors? Which ultimately leads to my last point. They can provide high rewards, but given the high costs, can also provide a dramatic decline and losses to investors who may be buying too high. Remember, buy low, sell high, always have a plan. Cathie Wood reminds that to us very well with this example, and it's the kind of the tough nature of investing in growth stocks. So, guys, if you have any questions, please let me know. If you enjoyed this video, make sure to leave a like and subscribe for more content. You can visit me at thetradestudy.com, and I will see you in the next one.